Eric Muathe, Muathe.com, with part 1 of the weekend market analysis for US markets for March 18th and March 19th, 2017. Let's take a look at markets here at the close of Friday. Let's call it what was for the most part an unchanged day. Let's take a look at those charts. By the way, if you hear some construction sound during the course of this video, it's because there's some work going around my office. And anyway, let's take a look here at the monthly. We can see that we continue seeing this aspect of markets holding above 69.1 on the monthly and weekly charts. For example, the Dow here holding above 69.1. Same thing can be said about the S&P 500. It continues to hold above RSI level of 69.1. Same thing in terms of the NASDAQ monthly, so no change from last weekend's video, holding above 69.1. And what this means is expect the market to be sideways to bullish as long as we are holding above the 69.1 threshold. Now that's the monthly. If we take a look at the weekly, we can see that the NASDAQ continues to trade above 69.1 on its weekly. So does the S&P 500. One thing we should be aware here, I should point out for the S&P 500, there is a possibility of a breakout now that it has had 2 weeks of rest since recording the most recent all-time weekly closing high. So we can watch that level. And the level to watch there for the S&P 500 for a potential breakout is if it can move above 2383.12, which is the current all-time confirmed weekly closing high. A breakout above that level will be very bullish, especially given that we already have the RSI trading above 69.1. So watch out for potential breakout above 23.83. Such a breakout after 2 weeks of rest would be the minimum rest period before a quality breakout. Take a look also at the Dow. The Dow continues holding above 69.1. In fact, the Dow has been holding above 69.1 on its weekly RSI since about end of November. And throughout all this period, you can see the RSI has remained above 69.1. That's why I say that as long as the RSI on the weekly continues to be above 69.1, expect markets to be sideways, if not outright bullish. And you can see a good example of this given how the market has been trading since this market moved above 69.1. Just like the S&P 500, let's be aware, after 2 weeks of rest, after recording this previous all-time weekly closing high for the Dow, the level there is 21,005.7. So if it can break out above this number, which is the current all-time weekly closing high, that would be a good breakout, especially given that the RSI continues to be very bullish. So a breakout above 21,005.7 would be a great indication that the market has a lot of upside that it has to record. So be aware, a breakout here would really substantially continue moving this market higher. Now here, as I've been saying, S&P 500 monthly chart going back to about 2009, so off the lows here of March to the current level here. Just want to show you this period here, the consequence of what happens when markets hold above 69.1. So we see we moved above 69.1 here in 2013 during this quality breakout. RSI jumps above 69.1, stays above 69.1 until somewhere here, which is almost 2 years later. So here the question becomes, how long is the market continuing, or is going to continue holding above 69.1? The more it stays above this level, you can be rest assured that pullbacks are going to be shallow, that ultimately the market continues to have good momentum to the upside. Bears would like the market to give up all this bullishness by dropping back below 69.1. The NASDAQ daily is doing its best to break out above the recent all-time daily closing high. As of right now, it's not been able to confirm a breakout, and the level to watch here is whether it can move above 5904.03. So a breakout here would be great. As of right now, it's been unable to do that. But one thing we can see here on the daily charts for most of the major averages is we continue looking at a market that is still trading well. In fact, if you take a look at this line that I drew here, You can see since we broke out here above the previous daily resistance line on the RSI, which is this period here, so that shallow breakout there, or short-term breakout, the market's been coming back to back test this blue line for a re-entry. Over the last week, we've bounced on this line twice for the lows here, and now we are seeing the market trying to break out. So definitely we do need a breakout if bulls are to continue moving this market beyond current highs. And at the same time, a failed breakout after several attempts might suggest that with a failed breakout that ultimately market is running out of momentum and to expect a pullback. But what I could say here is, as long as the market is holding above this daily support line, this market should be sideways to bullish. If you take a look at the Dow daily, there's a simple line connecting RSI lows, and as long as this short-term line is finding support, we can assume that the market continues to be stable, if not bullish. So if the market is holding this line, that's good. At some point, should we break below the line, then maybe we might get a little bit of a deeper pullback. Right now, the market ended the week exactly on that line, so we can assume we closed on a constructive note. Bouncing on this line might just take the market to fresh highs. If we take a look at the S&P 500, let me give you a different view. There was a short-term breakout here. In fact, we can say there was a wedge. We broke out above the wedge here during this breakout here in price. So after that price breakout, what's going on here is the market's been using this level here, this breakout level right there, and we can see the market has come back to test that level twice, here and here, for the lows here and here. So as long as the markets are bouncing about that blue line on the daily for the S&P 500, we can logically expect the market again to be sideways to bullish, as long as this line here continues to hold. Now if we take a look at the Dow and take a look at the hourly chart, you can see that over the last day or so, the market's been trying to move above what was the break line on the RSI. So we can say this break here brings the market off the highs. And so what we are doing here is we've been testing this line, and at the highs of late in the week, the market hit that level and we stalled right there. And there's also a line on the hourly for the Dow connecting RSI highs. If you do it like that, you can see that we made contact with that line as of late Friday, and we pull back slightly into the close. So that's the hourly chart. Keep in mind the RSI setting here is at 26, which is the RSI setting I use. If we take a look at the 30-minute chart for the Dow, we can also see the same type of analysis. We are coming back over the last day at the highs of the week. The market is testing what was the break line here off the highs there. So the RSI was being tested. At the highs of the week, we touched that line and had a slight pullback, which is the highs here. And as of Friday's close, the market touched the top line on the 30-minute line. So something like that. We hit that line at the highs of Friday's session, and we ended the week with a little bit of a pullback. So for now, on the hourly and the 30-minute chart, those are the challenges. If the market is to move higher, it needs to clear this hourly and 30-minute resistance levels on the RSI. Eric Muathe with Muathe.com. For subscribers, be on the lookout for part 2 of this weekend's market analysis video, where we should be looking at ideas on the short and long side and some ETFs, and obviously we're going to take a look at commodities. Eric Muathe with Muathe.com. As always, good luck, peace, and blessings. Enjoy your weekend. I am out.